This is really interesting, folks. In today's conversation, I want to share with you massive business loans for new businesses. So we have 7 very rare lenders that approve you for large amounts fast and easy, even with no revenue. So you want to stick around till the end of today's conversation. Welcome back, folks, to another edition of the Awesome Sir Kiwi Show. How are you today? I hope you're all doing fantastic. I'm doing marvelous, if you had to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk about massive business loans for new businesses. We have 7 very rare lenders that approve large amounts fast, even with no revenue. Number 1, we have a Seek Capital. Our score 8/10. So the good thing with Seek Capital is that you have a wide network of third-party lenders that specialize in various financing solutions. So if you're a new business and you have a strong business plan with strong sales projections, they might approve you even with no revenue. Okay, so this is not a direct lender. They are I would say a network of lenders. Okay, and what we love with Seek Capital is that they have a proprietary lender matching technology. So basically, depending on the industry you're in, you have a chance of being approved. Okay, they have long-term and low rates with SBA loans if you qualify for those loans. They have very high customer reviews, and what we love is that this network is actually backed by several major investment firms. Okay, and one thing we love in general is that with Seek Capital, you can get up to $5 million. So typically $25,000 to $500,000 if you are a startup. Okay, loan terms up to 25 years. The interest rate is really kind of interesting because they have a prime rate plus 2.25% to 4.74%, 4.75% on certain loans. That's on the lower end though, but usually they have a double digits interest rates. And one thing I want to say here is that if you want to qualify for this loan, the higher your credit score, the better. So they probably have they love applicants who have a credit score around 680. However, in some cases, we have seen that the Seek Capital has approved the applicants, especially startup applicants, if you have a FICO score around 600. Okay, so Seek Capital is a very great. They're not really that well known. However, it is a digital lending platform that actually is growing in popularity. They are growing in innovation, and they will take care of you if you're a startup, if you're a new business, or even if you are an established business. Okay, so this is really great. And again, it's not a direct lender. They are partnering with major banks, major investment banks, major investment institutions to provide this kind of loans. Okay, and those partnerships allow Seek Capital to lend in all 50 states. Number 6, folks, we have here Upwise Capital. Our score 8.5/10. So if you are a new business and you're trying to get a loan, a large loan, even with no revenue, it is possible. But well, the cool thing is if you have revenue, it's even easier, right? So, but this is really good. But the good thing with Upwise Capital is that they specialize in financing unpaid invoices. Okay, and we love the fact that they are very transparent. They are very innovative all the time. Okay, they love providing all kinds of business loans to small businesses, both startups and established. Okay, and so you have a business lines of credit, SBA loans, short-term loans, term loans, working capital loans, equipment financing, invoice financing. Sometimes they will give you real estate financing if you are looking for that kind of financing. Also, accounts receivable financing. Okay, property, plant and equipment financing, bad credit business loans, cash advances, and healthcare financing. So what I'm trying to tell you here is that with Upwise Capital, you have a whole supermarket of loans to consider, whether you are a startup founder or you are an established business owner. Okay, and let's just talk about the pros and cons of Upwise Capital. What we love with Upwise Capital is that they will finance you based on the credit of the invoiced business. They have excellent transparency in their whole lending program. Okay, and the invoice, of course, is used as collateral So it doesn't matter whether you are a new business or an established business, as long as you have sales on the books, they will finance you, okay? And you can finance up to 100% of your invoices or accounts receivables, okay? And we love the fact that they can fund you as fast as the same business day. What about the accounts here? Now, Upwise is well known when it comes to looking at the quality of your accounts receivable. So invoices must be from well qualified customers, okay? And the thing is that Upwise Capital is an online lender, so they don't have no physical brick and mortar branches. Okay, you can call to someone over the phone. You can talk to someone over the phone, but you have no idea. You have no way of going to an office to discuss whatever matters you want to discuss with them. Okay, and one thing I want to say here also is that this is a drawback for Upwise Capital. Their fees are based on the time it takes for the customer to pay the invoice. So this is what I was talking about earlier. You want to have quality customers who pay within the time, within 30 days or within 45 days. Because the last thing you want is to have to chase a customer that doesn't pay quickly because because there is a problem. Okay, and one thing I want to say here is that here are the invoice financing terms. So loan amounts up to 100% of the invoice amount. Loan terms, those vary between. It depends on when you actually submit the invoice for approval. So it is based on when the customer pays the invoice, and typically charges 1% of each month the invoice goes unpaid. The factor rate goes from 8% to 30%, and the process time as fast as the same business day. Number 5, folks, we are still having a conversation about 7 rare startup lenders that approve you no matter what, even if you have no revenue. Number 5, we have Finance Factory. Our score, 8.5 over 10. In our view, this is great for overall startup funding, okay? And Finance Factory can get you funded with no business history or established revenue, as long as you have just one of the 3 C's: credit, cash flow, or collateral, okay? And so here are the pros and cons here. Pros: this funding is available to new business owner. They offer a wide variety of funding product to support later stages of growth. They have rate and term transparency, and they will fund you in 7 to 10 business days on average. And the good thing is that you can see your funding range reports, okay? Here are the cons. Ideal credit score is at least 680, but again, we have seen in our research that they have approved folks who have a 600 as a FICO score. If you have maybe 2 of the 3 C's, again, the 3 C's are credit, cash flow, or collateral. Okay, and one thing I want to say here is that they also have a business credit card option, but this carries high interest rates when the 0% introductory period expires. So the bottom line here is that when you think about Finance Factory, I want you to think about flexibility, okay? If your startup doesn't yet have cash flow or collateral, Finance Factory may still get you financed if you have a personal credit score in the high 600 or even 700 for that matter, okay? So this is really good. We love the streamlined application process. You are able to talk to someone, okay? You have a personal contact, okay? You have a free funding range report and quick funding. So this is really good. And so the company has been around for nearly 15 years now, more than 15 years, but as a matter of fact, and they're not a direct lender. So they have an online marketplace model, okay? So the company matches small businesses with lenders in all 50 states, providing loans for all stages of growth. So the loan amounts, $5,000 to $350,000. Loan terms, 0 to 7 years. Interest rate, 0% for up to 21 months to 15%. Okay, and we love the fact that they actually have fees, but they are transparent on the fees. Okay, they're not going to hide it. They don't have hidden fees. No, their fees are upfront. So they go from 4.5% to 9.90%. And the process time, 7 to 10 days on average. Okay, so this is really good. And one thing we love is that startup funding is really quick. They are really quick, and they will let you know. They will actually assign a a personal contact to you, and that will be the person you'll be talking to if you have a problem. So Finance Factory 8.5 over 10. Number 4, folks, we have Midwest Corporate Credit. Our score 9 over 10. So if you run a startup that has, let's say, that has proven high growth in the first, let's say, 1 year or in 2 years, Midwest Corporate Capital, Midwest Corporate Credit, that's the name, they will actually fund you. They have a business line of credit that can fund you, okay, and it funds up to $1 million within 15 days of your completed application. And the cool thing is that they might even approve you if you are a brand new business with no revenue. The thing here is that you need to have one of the 3 C's, as I said before. You need to have good credit, and also a business plan can help. Okay, you want to have a strong business plan. Write a business plan that is that features clear financial projections. So you tell Midwest Corporate Credit how you intend to make money, and if the business model that you have in place is even monetizable. This is really important. Here are the pros and cons of this funding program. Pros: no collateral required. The business line of credit is a revolving account. Rates start at prime plus 1%. No upfront fees. Interest only payments. This is really good. Here are the cons. They require for most of their programs 2 or more years in business, but like I said, they will approve you if you have a strong business plan, okay, and you contact them in advance. So you want to contact them, you want to speak to representatives so they can explain to you how those good things work with them, okay. And the one thing, you need to demonstrate your repayment ability from your earnings, either projected or actual, okay. And Midwest Capital have been around since 2010, and will love the fact that they are constantly growing, okay. So loan amounts up to $1 million, interest rate prime plus 1%, process time funding as soon as 15 days, revolving line with interest only payments allowed, okay. There are no fees up front, but you have 10% success fees based on the amount you choose to borrow, okay. And there is no early prepayment penalty, okay. The only thing is that this lender does not report to personal credit bureaus, okay. They might report to business credit bureaus in some cases, but they don't report to personal credit bureaus, okay. And what we love is that you can see on the screen right now that they fund startups, okay. So so they have new business funding. Startup, they have no collateral required. You can get up to $250,000, okay. And they have no interest for 12 months. Really, really good. Number 3, folks, we have here Become. Our score 9 over 10. So when you think about Become, you're thinking about startup funding up to $100,000, okay. But the catch is they provide only business loans for e-commerce sellers. So if you're not an e-commerce seller, you really want to forget Become. But if you are selling online on Amazon or whatever, you're on Shopify, or you have some kind of connection to the e-commerce globally, this is really good. To e-commerce processes is really good. Become will actually fund you up to $100,000, okay. They have superior rates. They have fast online funding. They have step-by-step guidance, and they have funds that will fuel your growth very fast. This is really good, okay? You can access working capital to take your stock, team, and sales to the next level. So how does the whole thing work? So with the Become, you have data-driven, speedy business loans, okay? And so you connect your platform. So no paperwork needed. You simply connect your online stores, your Amazon, your Shopify, your eBay, your Walmart marketplace, whatever, and you have to connect your online store and your marketing platforms. So Facebook, Google, or Amazon ads. So what they do is that, so once you connect everything, they will review your dashboard. So they will analyze all of your metrics to gather a tailored business dashboard, okay? And so they will use it to discover how lenders see you to improve your business and, in turn, your fundability. Then you can compare and choose. So they will provide loan offers and terms based on your business's financial health. So you just need to compare and choose the best one. and that's it. You get the funds. So you can receive up to $100,000 and get funding straight to your account in as little as 24 hours. So this is really simple, okay? So what we love with Become is that we have a few pros. So the lending score. So your tailored dashboard will help you improve your fundability. They have one online application, no charge to apply, and they can fund in as little as 24 hours, okay? And the cons here, they have a limited funding amount of $100,000, okay? And they have short loan terms of 3 to 6 months, and in some cases, 12 months, all right? But the bottom line is this is really interesting. They have a proprietary algorithm, and they look at all kinds of online stores. But again, you need to actually have an online store. So if you don't sell online, don't go for a loan, don't apply for a loan at Become. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Story Q Show. We are actually having a conversation today about 7 rare startup lenders that approve you for large amounts, no matter what. Even with no revenue, they might approve you, okay? Number 2, folks, we have Smart Biz. Our score, 9.5 over 10. So when you think about Smart Biz, first of all, we love the fact that they allow you to do a soft pull on their platform. So no hard inquiry. You just check out the systems. If you check out their system. If you like what you see, then you can go ahead and just go with the hard pull and actually apply for real. So with SmartBiz, you have fixed interest rates and shorter repayment terms. This is a great option when you need funds more quickly. Interest rates as low as 6.99%, and they have term loan amounts from $30,000 to $500,000. And repayment terms to 2 to 5 years. So this is really good, okay? With SmartBiz, you have flexibility. This is really good. And they have one application only. So they have only one application. And the cool thing is that, so the application takes about 5 minutes to finish. And one thing you need to understand is that their loans, though, those loans have shorter, I would say, maturities. So be very clear about that. So you're not going to get the 5 years or 7 years with SmartBiz. You're probably getting like 12 or 24 months. Okay, so this is really important. And customers who qualify for a term loan may have the option to reduce their term loan interest rate by 2% if they choose a prepayment penalty of 5% of the total outstanding balance. Okay, so something you need to think about. And one thing I want to say here is that you can use the money for everything. They do not restrict you. Everything is fine. And what about the qualifications here? 2+ years in business. But new business is accepted if you have a compelling business plan showing positive sales projections in the next 36 months. Okay. Business owners must be U.S. citizens or legal permanent residents. Business owners must have personal credit scores above 660. And they need to demonstrate that they have the cash flow to support loan payments. Okay. And they do not accept folks who have bankruptcies or foreclosures in the last 3 years. And if you have outstanding tax liens, they're not going to work with you. So those are the 2 things you need to avoid if you want to get a loan with SmartBiz. Okay, you don't want to have any bankruptcy, any open foreclosures. You don't want to have, and this not just open, but also in the past 3 years. Okay, and you don't want to have outstanding tax liens. Number 1, folks, we have Lantern by SoFi. Our score, 10 over 10. This is a really good lender, folks. First of all, everybody knows that SoFi is a big player when it comes to personal loans. Now, they're trying to extend their reach into the business lending platform, in the business lending space, and they're doing a good job at it. Okay, and if you have no revenue, you are a new business, you may qualify for a loan through Lantern by SoFi, and they provide fast funding for your business, loans up to $2 million. Think about it. You can get a decision in as little as 24 hours. We love the fact that they have a soft pull capability. So you are basically you're avoiding a hard inquiry on your personal credit if you go through Lantern by SoFi. Okay, so you provide a few details about your business to compare and apply for loans, and you will hear back on whether you are pre-qualified in as little as 24 hours. Okay, so they have loans up to $2 million for your business. You just need to compare and connect with small business lenders who can provide loans of up to $2 million, and you'll receive funding as soon as the next day. Okay, so if you're approved for a small business loan, you could have the money as soon as the next business day within 24 hours. Okay, so when we talk about SoFi, we talk about Lantern by SoFi, you have a constellation of business loans. You have SBA loans, term loans, lines of credit, invoice financing arrangements, merchant cash advances, equipment financing programs, startup financing programs, small business insurance programs, and you have the paycheck protection programs that was around for the last 2 years. Okay, and you can use the money for everything. What we love with Lantern by SoFi is that they're really flexible. They don't have restrictions when it comes to how you can use the money, because some lenders have restrictions in place on how you can use the money, but Lantern by SoFi does not. Okay, and so you can use the money to fund payroll, working capital, utilities, debt consolidation, location remodeling. This is really good. Equipment purchasing, marketing or advertising. So let's say you are expansion also, and you can also you can use the money to fund liquidity gaps you have in your balance sheet and your income statement. So we're talking here about cyclicality and seasonality. So if you are in a business that is seasonal and you need some cash to sort of to expand, you need some cash to really take care of your business when business is down, then this is a great loan for you. Okay, Lantern by SoFi, 10/10. Let me quickly give you an overview before we close today's conversation. One thing you need to understand is that if you want to qualify for a startup business loan, it's really important to understand that a lot of lenders want you to have a strong cash flow, right? They want you to show some kind of cash flow. But remember, there are three C's when it comes to credit. You have credit, of course, you have collateral, and you have capital, or cash flows, if you will. It's important to know that if you are a new business, you want to constitute a base of customers. Okay, it's important, and you want to have a business plan. The business plan should feature a complete set of financial statements, and those statements can be actual or projected. Okay, the whole thing is that you need to show the lenders that you have thought about your business. You do have a business model that is monetizable. Okay, and one thing you need to understand is that there are some startup business loan types that actually will approve you based on your balance sheet, based on your cash flows, based on your income statement. Okay, and it's not really that hard to get a startup business loan if you know where to look. Okay, a lot of banks, if you noticed in today's conversation, we have not indicated any bank. This is because banks want you to have a minimum revenue, probably $100,000 or $50,000. So these companies that I'm just listing here, they're not asking you for any revenue at all in some cases. Okay, and in other cases, they will want you to show proof that you can repay the loan. Okay, and so bottom line is banks do not give loans to startup. Most of the time they don't, unless you have a relationship with them. Unless you have been with the bank, let's say you have been with PNC for the last 5 years or 10 years, you do have a strong relationship with them personally or business wise. Okay, and they might lend you. But overall, banks are more risk averse, which means that they want you to demonstrate some kind of fundability, some kind of history before actually paying attention to your business. So if you're brand new, if you have three months or 1 month or 6 months, banks are a little cautious. And it's important to understand is that you also should think about collateralized loans. So loans that do not require any kind of credit. For example, equipment financing or accounts receivable financing. Those, you're able to get those pretty easily, even if you're a startup, because you don't need to demonstrate revenue because the lender knows that if you don't pay, they're coming and repoing. They will repo your equipment. They will repo because they get the title. They still have the title. Okay. Same thing with the invoices. If you're trying to get invoice financing, You just need to make sure the customer is of reputable quality, and you'll get the financing you need. Okay. And so in choosing the best startup business loans in today's conversation, we considered a list of lenders. We looked at different criteria, different maturities, different requirements, different eligibility criteria. So if you want to learn more about our process, check out this loan evaluation approach video. All right, folks, here are the 7 rare startups, the 7 rare startup lenders that approve you even if you have no revenue. Number 1, Lantern by SoFi, 10 over 10. Number 2, SmartBiz, 9.5 over 10. Number 3, Become, 9 over 10. Number 4, Midwest Corporate Credit, 9 over 10. Number 5, Finance Factory, 8.5 over 10. Number 6, we have Upwise Capital, 8.5 over 10. Number 7, we have SICK Capital, 8 over 10. Thank you so much for your attention, folks. I will speak to you another time. Until then, remember, stay marvelous.